The International Monetary Fund says South Africa requires a growth-friendly yet sizable fiscal effort to stabilize and lower its debt burden, reduce country risk premiums, and improve investor confidence. The COVID-19 pandemic exacerbated South Africa's existing vulnerabilities, which means tackling long-standing fiscal and structural challenges is more critical than ever to set the stage for a robust recovery and pursue strong, inclusive growth. Here are the details of this and other stories from the African continent.
The IMF has trimmed its forecast for South Africa's 2021 economic growth to 2.8% from 3% and sees expansion at only 1.4% next year. The country took out a $4.3 billion loan from the IMF in 2020, its first yet from the organization at a sovereign level. South Africa's economy probably contracted the most in 9 decades last year as a lockdown to curb the spread of the virus weighed on output. Even before the virus restrictions, the country was stuck in the longest downward business cycle since World War II, with power shortages and bailouts for loss-making state-owned companies contributing to a rapid deterioration in public finances. Meanwhile, the Food and Agriculture Organization FAO says locusts remain a major threat to the Horn of Africa due to favorable weather conditions. FAO Senior Locust Forecasting Officer Keith Chrisman observes that while plenty of efforts have been done in the last year to fight the locusts, the current weather in the region favors the insects. He says the occurrence of cyclones means the failure of seasonal rains and the presence of strong winds that carry the locusts from one region to another. In the Horn of Africa, locusts have invaded Kenya, Uganda, Tanzania, Somalia, and Ethiopia, and have also spread to Pakistan, in India, and Southwest Asia. Finally, inflation for the 16th straight month, hitting a record 3-year high, driven by rising food costs along the enhanced price index. Nigeria's economy has trapped in a recession, and the value of the local currency naira has depreciated significantly against other foreign currencies like the US dollar. As a result, the prices of most products, including the imported food items, are negatively affected. The average cost of a bag of rice is currently a little less than $100. This time last year, it was just over $50. Experts said that this could push 7 million Nigerians into poverty because the incomes of most Nigerians have not risen over that period.